just to help everybody else who should be on here and who isn't on here. I'm going to have this recorded. Okay, so let's roll. I'm going to meet out everybody. Please just kindly stay muted. Actually, you won't be able to unmute yourself except I do that. Okay, so let's kick off.
Can't hear you.
Okay, so I have you unmuted, so you can give me that feedback. I'm sure you can hear me now. Confirm that you can also see my screen, please.
Yes, I can see your screen. I can hear you. Yeah.
Okay, fantastic. So I'll be on here for a while and eventually I'll switch. Good evening again, everybody, and good to have you all on here. Have you all muted out. So just stay mute. Towards the end of this, would have enough time to take questions and chit chat and jump in. If you have questions as I go, feel free to write in the chat box, and then just bring them up at the tail end when I declare it's time for us to have that kind of Q&A session. Okay, so just before I kick off into two critical things I'm going to show off today, basically, I just want to give everybody a hands-on feel or a hands-on walkthrough on trading. And like I usually tell people, look, trading is you simply using a mobile app or a PC app. Trading professionally or consistently making money goes a little beyond just using a mobile app. Or making money, placing a trade, buying and selling currencies is you simply using a simple mobile laptop app, which I think just about everybody on here, or if you're watching this and you haven't seen that, then you get to see that today. We're also going a little bit into the chats, just trying to demystify what price and all of that looks like. However, I will just let you know that this is going to be complete. What I'm going to say and what I'm going to show will be sufficient, but then it's also taken for granted that everybody has access to IML Academy or is somewhere finding their way through utilizing or going through the IML Academy basic course. So like, we have the basic course, we have the more advanced stuff, but if you just start off going through the basic course, I think you'll be fine. You'll have most of the generic beginner intro questions answered. Market participants, what is Forex? I believe everybody on here knows what Forex is or has some idea of what that is. What is traded in the Forex markets? When do you trade? Buying and selling? What is a PEEP? What are leverage and lot sizes? What's a trend? What are candlesticks? What are support and resistance lines? What is a pullback? Trading window, risk management 101, as it says, which we'll go into tomorrow's session. What are limit and stop orders? Like a few people on here have gone back and forth trying to get clarity on pending orders, basically. What is a stop loss? What are the three types of analysis? How to draw support and resistance lines, trading plan, confirmation checklist. We'll go into some of these tomorrow, and how to literally place a trade. So I'm going to touch on this today as well. Okay, so you have access to all of this. I take it for granted that you do, or you're about to, and you're going through this. So just to jump into today's session, basically what's traded in Forex, like you should already know, currencies. And this is done by using a mobile app. I'll skip forward using the mobile app, and I'm just going to jump straight into something I have here. Just to be sure. So it says reading the price charts in the Telegram group. This PDF file is there. I'm going to drop it in again pretty soon, just so you can have access to it again. But I'm just going to walk us through this. It says reading a price chart. Trading is a skill set. It's like wanting to be a doctor or a professor in or an expert in any field, engineering, medicine, or wherever. Then to go that far, you need to be able to read and write in whichever language, English for us, for me here in Nigeria and most parts of the world. Yeah, you need to be able to read and write. That's what the charts, us being able to interpret the charts, becomes the foundation of our trading escapade, so to say. What this also means is this is the entry point, this is the key point. Sorry about that. Okay, I'm going to switch between this. I'm going to write on the screen a bit now and then. Just one more time to confirm I can be heard. Oronke, can you give me some feedback? Can you see the screen reading a price chart?
No, only the yes, I can see reading a price chart. Yes.
Okay, but you can't see my face.
You can. You are right at the bottom of the screen.
Okay, yeah. Fantastic. So that's what we need. Okay, so just go over reading the price chart. First question here is, how does the market move? How does markets move? And while I do this, I'm also just going to put up charts. I'm going to switch to my mobile phone at some point because that's pretty much going to be the most accessible, most convenient way for people to trade. But I'm also just going to pull up the charts on the right side as well. So we could also look real deep in as well, okay? Okay, so stay with me, stay with me, stay with me. Okay, so reading the price chart, how does the market move? Well, at any point in time, the market is moving either up or down or sideways. So look, we all know how to speak. We all know how to read English. We all know what these words mean. So just picture it upwards, sideways, or downwards. That's as simple as it is, right? And we're going to look at what that means. Now, there's some terminologies, and I tell people, look, you could go deep, study, know the lingo, or just understand the concept and understand what's actually required for you to come in here and make money. Okay, so just think uptrend, upwards, uptrend, upwards movement. Well, that's called a bullish trend. Bulls, bull and bear. So you'd hear bulls and bear, and you hear bulls and bear and bullish and bearish a lot in Forex. Bulls or bullish trend just means upward movement. Bearish trend, you guessed right, just means downward movement. Okay, so that's pretty much it, up or down, or the market is moving sideways. So like I promised, this PDF file I would put in the Telegram, you'd have access to it. So just stay with me and follow through. Bullish trend, upwards, this is what typically that looks like. Upward movements, right? Bullish trend, upward movements, okay? Bearish trend, downward movement. So the market is either going up or it's going down, or it's theoretically going sideways. So there's that as well. Okay, sideways movement for the markets is referred to as consolidation. So imagine consolidating a position or a price range. Right, so just go with the English meaning of these words, picture them, and that's pretty much what it means in the markets. We'd flesh this out and would define them, or would see in terms of market structure what that actually means. But that's pretty much what it is. Uptrend, bullish, bearish, downtrend, just up movement or downward movement, or the market can appear to be consolidating, meaning consolidating in a range, as you can see on the charts right there. Okay, so the market's either moving sideways. Sideways doesn't mean it's one straight line. Sideways just means in a range. So in a range, in an obvious range, market is moving sideways, right? Okay, so take notes. Market is either going up or down, or the market is moving sideways. So how do we trade? Well, we're buying and selling right? So we're simply buying and selling currencies. That's just what we're doing trading. How do we make money trading? How do we make money from buying and selling currencies? Well, in a nutshell, this is how we make money. This is how we make money. So we buy, and the aim of us to make money, the market has to go in what direction? Upwards direction. Okay, so the market has to go. If we buy, market has to go okay. So that's it in a nutshell. All right, if we buy a currency pair, market has to go up. It has to go upwards after we have bought that currency pair for us to make money. Switch that up for sell. So if we sell a currency pair, you guess right, market has to go downwards for us to make money. That's just it, period. So we buy, we sell, market goes up, we make money, market goes down, we make money. Okay, when I say market, I just mean the currency pair we buy needs to go up or down for us to make money. Take note, this movement has to occur after we actually take a position, after we actually place an order, so after we actually buy or sell. The movement afterwards. So it's irrelevant what the market Okay, I'm back. Can you hear me? Are we together? Can I be heard? Or okay, please give me some feedback. Can someone give me feedback? Okay, TT, I see you.
Yes, we can hear you. Yes, we can hear you.
All right, fantastic. Thanks. I should be good. So just okay. So we continue. Okay, so market goes up after we buy, we make some money. Market goes down after we sell, we make some money. All right. What this just means is if only we are able to predict what the market is going to do, future. And I was just going to say what the market has been doing, previous direction in itself has no bearing on our profits or our losses. It's what happens after we take a position. So in trading, if the market can only go up or down or sideways, we're simply looking at learning how to read the chart and be able to anticipate the start of an upward movement, or should I say the continuation of an upward or downward movement, or the reversal of an upward or downward movement. That's all. So long as we're able to predict correctly and take a position, a buy or a sell position, and the market plays out as we've predicted, and that's how we get to make money, right? So that's when you go on to use the application MetaTrader 4 on your mobile or on your PC and actually buy or sell currency. Okay, so market is either going upwards or downwards. Now, at what point will this upward movement end? Or at what point will the downward movement end? at what point does it reverse? Or are we able to see and observe key levels where it had the potential to reverse, or instead it continues going in the same direction? Continuation. So these are the two key, these are the keywords I'm throwing on out there, right? So the keywords are continuation of trend or the reversal of the trend. So these are the two key things. So the market is going up. Is it going to keep going up? What signs can we see? So market going up, is it going to reverse? What signs can we see? Well, where the market price is and how it acts or reacts to the market price is a major way of anticipating what the market will do next. And that brings up the topic of the word or the concept support and resistance. All right, support and resistance. So let's just picture and imagine a house. Picture and imagine a house. A house with, let me find something I can mark up with. Okay, so picture ceiling and picture a floor, right? But what if this was a two-story building, right? So let's picture this. This is a house, that's a roof, this is the first floor, and that's the ground floor, all right? So we have a floor right here. So the market is in an uptrend, 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 uptrend. At what point, so think of this like a floating balloon going upwards. Think of this as an object that you throw upwards. At what point does this have the potential to either reverse, stop going upwards and start coming down? That will be the ceiling. However, if the ceiling is made up of not concrete and steel, but of paper, and the object moving upwards is moving fast enough to actually pierce through, the ceiling, right? If this happens, then can we say it has the potential to continue going upwards? However, if the object or the ceiling, which is the floor of the top floor, is concrete and the object is obviously not going to pierce, then it means it's also at that point that we may see a change in direction. All right? What this just means is the market is typically going to continue in its direction until it gets to a price or a level of resistance. Resistance. That's just what it means. So we're going to clear this up and mark it out. Okay? So resistance. Now, if you think of the word resistance, it means just something or a level or a position that has the potential to resist the current movement, the current direction. So if the market is going up, the resistance level is the price point where potentially the market can change its direction, can be resisted. However, if that anticipated price point is broken, so if that price point is broken, then that price point can instead go on to act as support, meaning resistance. Resists, can go above. If the object is strong enough and actually pierces, then it loses some momentum potentially on this breakout. Now, whether this will continue going upwards is if this object is not able to go back below. But you see, if it's able to break this, loses some momentum, and this floor then goes on to act as support, then what we expect or what we can anticipate is a continuation of this movement. If you're able to grab this concept, that's all there is to trading. That's all there is as a foundation to trading. And actually, that's as simple as trading can be. So let's take a look at the markets. Let's jump in a bit. Let's go down. Okay, let me go down here first. Okay, so just to explain or to further drive home the point, this is what's happening in the markets. Markets is either going up, gets to a point of potential resistance, and it's either resisted successfully. Or it's able to break that resistance point. If it does, then previous resistance may go on to act as support, or to continue the upward trend. So remember, continuation or a reversal. So it's at support and resistance points. At a resistance point, we may either get a reversal of an uptrend or downtrend if you swing that upside down, or we potentially could see resistance broken and acting as support to continue the trend movement. So in an uptrend, to continue the uptrend. So what this just means is support. Well, let me start off with resistance. What this means is resistance is simply based off of the direction. So resistance is either above for an uptrend or below for a downtrend, one and the same thing. Resistance in an uptrend above, resistance broken and acting as support continues the trend, the uptrend. In a downtrend, this is your downtrend scenario. So if this acts as resistance, previous resistance eventually broken at this point, broken. The market price goes back to previous resistance broken and is not able to break back above in this scenario, but rather is rejected, then this gives us a continuation in the trend, right? Continuation in the trend. So remember, the market is either going up or it's going down. So think of consolidation as the market not being able to break a resistance above and below. So then the market is going sideways. But for the market to truly be in a trend, in a direction, then resistance levels are being broken and are acting as support. Resistance levels are being broken and acting as support for the market, for us to actually say market is in a trend, it's going in one direction. So I'm going to mark this out a little bit so it's clear. Okay, so the market is simply consolidating if it appears to not be able to break resistance levels. Market is consolidating. Market is in an uptrend. Market is in an uptrend only if resistance above is broken and acts as support. Resistance broken acts as support. Resistance broken acting as support. That's a trend. That's a trend. An uptrend in this scenario. On the way down, if these levels are broken, acting as support. Resistance broken, acting as support. Resistance broken, acting as support. That's a downtrend. Okay, So our ability to identify these key support or these resistance levels is what will help us either observe and see that there's a reversal of a trend or that there's a continuation of a trend. That's what prompts our buying and selling. Okay, that's what prompts our buying and selling. So let me give you a textbook example, and then I'll jump into the market and give you an example. Okay, so I hope we all have a quiet background. I'm just going to ask some questions. Okay, so at this half of the market, so at this half of this picture, can we observe and see why it is said that the market is consolidating? It's consolidating because we have a point resisted, came back down, resisted, went up, couldn't go above, resisted, came up, resisted, came back up, resisted, came down, couldn't go below, right? So this is your typical consolidation. So like I said, it wouldn't just be a straight line. Market is never going to give you a straight line. However, because we can easily identify that it's moving sideways, or more importantly, the fact that it's not breaking resistance levels. Okay, so that's it. Okay, now when a resistance level upwards or downwards, remember one and the same thing, whether to the up or to the down. In this scenario is to the upside, right? Okay, so when the resistance is broken, in this case to the upside, market comes back. What does it do? Bounces, bounces. So we can say previous resistance eventually broken and acting, this resistance now acting as support. Why is it now called support? Well, it's supporting the case that we may be starting an upward movement. So it's supporting, take note, we won't refer to this as resistance anymore because we're looking at it supporting the upward movement. Okay, so it becomes support. Resistance becoming support in the upward movement means we potentially could have an uptrend. So this is where you go on to buy, anticipating that there will be a continuation of the upward movement, right? That's where you go on to buy. Buy here, market goes up. Okay, sorry guys, I think you lost me again. Okay, so let's go back to the example. Okay, please confirm you can see the screen and you can hear me.
I can see it.
Okay, great. Okay, so resistance broken, now acting as support, gives us our entry to buy. Okay, again, market goes up, we make money because we bought. Why did we buy? Because we were able to identify a resistance point, price point, broken and acting as support. So this gives us the confidence to go on and actually buy. Okay, so we have a buy zone here. Buy. Okay. Now, at what point can we say, look, there isn't an upward movement or that breakout of this resistance level has not acted as support? Okay, so let me just draw it out to make it easy. if the price went up and came right back into this range and did this, we would not be expecting an upward movement because this floor wasn't strong enough for us to go in the upward direction. What it also means is if for some reason we buy here, the market goes up but comes back under here and does this, we don't need to remain in that buy position. This brings the concept of managing your trades or losing money trading. So like you would see in the academy, and you thoroughly be broken down for you. Market participants. So what's really moving the markets? Let me quickly switch. Let me switch to the charts. So what's actually moving the markets? Let's take a look. What's actually moving currencies? So in this scenario, I have Euro USD, the Euro and the US dollar. Euro US dollar. Okay, so if you think about it, European Union, United States of America, right? United States of America. Okay, so ignore the markings. Well, don't ignore the markings, just observe the markings. So you could see how easy trading can be. Okay, okay, so this is how easy trading can be. Okay, being able to identify points where the market bounces off, rejects off, right? Just being able to identify that. Okay, so let me go back a bit. Okay, so here we are. If you were to just look at this, we can say the market is going sideways. Okay, market is going sideways. Or if we put in support and resistance as the concept, then we can say market came here, went up, came here. This is resistance. This could be seen as a floor. This could be seen as the floor where a ball has just bounced off. So if a ball bounces on the floor and it goes upwards quickly, where is it likely to go to? Well, it's likely to go to a ceiling. Right? It's likely to go to a ceiling. This ceiling, we can then anticipate resistance. Well, we anticipate resistance if it's a concrete ceiling and if what's moving upwards is an air balloon or a light ball that can break through concrete. So if the price gets there and it gets rejected, is resisted, then we can anticipate the market to come all the way back down, right? So that becomes our sell point. However, if price is broken, okay, let me go back in. So let's make it interesting. Okay, so let's observe here. Price goes all the way up, comes down. If anybody is asking, why is this a sensitive level? Well, I can tell you it's a sensitive level because price has come here before and rejected. Price has come in this same zone before and rejected, right? If we keep going backwards, we'd observe that line becomes, so we go backwards. Would observe that every time the market came to this price, there was some sort of reaction, 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 right? So we had this as a level. We observed the market go up, break it, and have it act as support. Having it acting as support, price could not go back below. So we buy, right? That becomes your buy point. And at what point would have we changed our minds about this buy? Well, if this price came back under and did this, then we no longer need to be in the buy. Okay? I'm going to touch on the concept of this is me talking about the charts and price. And I'm going to end up going into price points, support, stop loss, take profits, and all those points. Okay? So stay with me, stay with my analogy. Okay, I still have some time, so hopefully I'll break this down enough. Okay, so price breaks that point, acts as support, so previous resistance acting as support, supports our upward movement. Okay, so we buy at this point, we take profit. What it just means is at what point, where is the potential ceiling? Where is the potential ceiling? Assuming we've just gone up the stairs and we're in a new floor. Where's the potential ceiling? That's our question. That's all we're asking when we trade. Saying, hey, have we just gotten into a new floor? Where's the ceiling and where's the floor? If we go below the floor, then it means this floor can't hold us. We're not expecting an upward movement. Instead, we're expecting a downward movement. We go into a new floor and the floor is strong enough. And we're saying, where's the ceiling? Ceiling means that becomes our potential target, or that becomes the price where the market may receive some sort of resistance. Okay? So here's our perfect scenario, uptrend buys. So we observe the market go up, break resistance acting as support. We buy, expecting it to go to the next potential resistance point. Next potential resistance point. Next potential resistance point. Next potential resistance point. So I'm going to unmute just to get some feedback. Can we all see this playing out? Does this make any simple sense based on what we saw in the textbook and what I'm showing you now in the live markets? Feedback, please.
Kind of.
Okay, so this is the point where you're going.
How do you get the line? How do you get the resistant line? Why didn't you put it in the middle? Why did you put it under? Like, what informed your decision?
Okay.
The resistant line.
Okay, so here is why. I'm drawing circles. If you look back in time, at what point did the market, at one point the market was here and he rejected it. Then he broke it and he came back down and he acted as support. So this is obviously a sensitive point. So I'm drawing a line. Theoretically, what you have is a zone. So what you have theoretically, or in practice, basically, not theoretically now, what you have in practice is actually a zone. Okay, so it's not an exact price, but a price range, a small price range, where every time the market gets into potentially, it has the ability to resist, reject. This is what you have. Okay, so if you look at my other example, so the blue line, this blue line, if we stretch this blue line backwards long enough, we'll see the same thing happening. See the same thing happening. So I'm just going back in time. Taking the blue line back in time. We see the same thing happening. Right? So it's like walking into a house and trying to identify the floor and the ceiling. Would that be very difficult? Okay, but it's not difficult because you're an adult and having been alive for a while, you can identify what the ceiling looks like, where the ceiling should be, where the floor should be, right? So this is just to let you know that as easy as it is, because you can be taught, so you can be told this is the floor and that's the ceiling. However,
Okay.
with time, you are able to actually identify it yourself.
Okay.
So I'm giving out a lot in a very short session. But these are the concepts that we'll begin to build. And as the week plays out and we jump into the live trading session, you begin to see how that if only we would simply be able to identify support resistant points, then we're able to make informed decisions based off of simple lines. That's it.
Mm-hmm.
Okay. So in reality, this is how trading plays out. Okay. In reality, this is how trading plays out. Just
Mm-hmm.
us being able to anticipate, figure out where the potential resistance may occur, and observe what the market does there. Then we react to how the market reacts at those price points. So in this scenario, in if I go back enough, price, let me go back in time. Sorry, let me find my way back. Okay, in this scenario, if you look at the two red lines, so if you look at the red lines, so this became my floor, this was a ceiling, and I just figured this ball can go above. So where do I expect the ball to drop to? Gravity, back to the floor.
Mm-hmm.
So I sell and I anticipate. So look at the red lines now, big picture red line. And I anticipate that this thing gets to the floor. Does it get to the floor? Or it gets to the floor in this scenario. Okay?
Mm-hmm.
So it's just this simple. We sell when we have some informed decision telling us about the direction of the market in the future, right? And so we buy or sell. In this scenario, we sold, anticipating the market is going to go down up to where. So we need to be able to identify the next potential point where the market might not go past,
Down.
right? So that's just it. Okay, that's just it. And this is how we make money when we're able to identify correctly. While I'm here, let me also just touch on how we also take losses when we trade and why we take losses when we trade. Well, first of all, this is a Euro USD, and this being the Euro USD means this being the Euro USD means we don't have control over the European economy, and we don't also have control over the United States economy. I think I need to mute. Okay. And the fact that we don't have control over these two means we may be wrong. It just means this ceiling may be broken and may become a new floor to support an upward movement. That we don't have control over the markets doesn't mean we can't identify or we're not able to predict and see and understand, or should I say interpret, what the market is doing. Okay, so here's your typical trading scenario. We're able to say, hey, we anticipate that this is going to go up. However, we also have an area, a resistance area, where we're expecting to see the market actually either break above, come down to continue upwards. What it just means is at this point, we are not in a buy. We're not in a sell position. If anything, we're considering a buy. So if this came here and it acted as resistance and we sell, we just have a small zone for us to be able to see if this resistance has now been broken and is instead acting as support. So we get out of our sell trade. All right. So this is how we trade. Was simply okay. I believe I'm back. Can someone confirm for me, please?
Yes, you're back. You're back.
All right, cool. So this is all there is to the market. Us being able to find a good enough, a big enough range, floor to ceiling, and for us to be able to observe what the market does at the floor or the ceiling. Where it's not broken, then we know where our targets are based on support and resistance levels, basically. What this just means is when we take a trade, we risk something. And in this scenario, this is our risk. Our risk is a small band, right? And in this scenario, this is our reward, all right? So we're simply saying, look, we're going to take a chance. I'm going to use a word, I won't say carelessly, but I'm just going to use a word. This next word I'm going to use loosely, right? So I'm going to take a bet. I'm going to take a chance. So I'm using all the words. Many people think Forex is gambling. Forex is guesswork. Forex is you just taking a chance, right? So I'm going to take a chance. I'm going to bet that, hey, based on the fact that this ball could not, I've thrown this ball up twice and it couldn't break the roof. It means this roof is pretty strong and there's a very high chance this ball is not going to be able to break it. So the ball is going to fall down, right? However, if at any time, maybe the second time or the third time, I apply more force and it breaks, then hey, this ball has probably gone into the next floor, not to come back down, right? So I have a small boundary to observe. I have a small boundary to observe and determine whether the market is going in my anticipated direction or not. What it means is if it goes in the opposite direction, I get to lose something. If it goes in my direction, I get to make some money. Right? That's all we're doing. So this brings me to buying versus selling, pending orders, buy limits, buy stops, and all of that. So I'm going to write a bit. Okay, I'm going to write a bit. So like I already said, we buy, anticipating the market goes up after we buy. Sell, anticipating the market goes down after we sell. Okay? Risk. So when we take a position, if in this scenario we sell, we set a value or a price point called SL, stop loss. It literally means what it means, stop your loss. It's a price which is set. Now, if the market keeps going in the wrong direction or in the opposite direction, contrary to your anticipation, when the price gets there, it will close out your trade. It's going to stop you from losing any more than that. And if you look, you would see that what that is an actual price point. So it's a price. It's a price. If you look to the right, it's a price point. It's a level where we're saying if the market goes above, get me out of this trade. Stop me from losing any more than that. Okay. We also get to set a take profit point. So again, we can go on to set it because it's We can go on to set a take profits. Take profit or TP is what could be referred to as take profits. Okay, take profits. Okay, take profits is just the price where we anticipate the market will get to and potentially encounter resistance. So we want to take profit at that price because we're saying for all we care, the market may never go below there. So at that point, we should be satisfied with whatever profits we've secured. So let's take some profits at that point. So we take profits at that point. Okay. Now, sometimes, so this is a scenario where we're buying, where we're selling. Reverse would be the scenario for buying. So we could have otherwise, just go back to sharing this. So we could have otherwise been buying here, knowing that a break below and retest will be out of this trade. Or if it goes up like it went up, took some time, but eventually went to the targets, to the roof, then we took profits here. So we take profits here if we bought here. If we bought here. And our stop loss. So we're saying if the price just goes below here, then stop us, get us out of this trade. Right? Okay. Now sometimes, like in this scenario, we already knew where the ceiling was. So we're saying when the market gets to the ceiling, so let's assume the price is still here. Let's assume the price is still here. It hasn't gone all the way up yet. Right? So the price is still here. Now we say because we know this is the ceiling, this is a potential point where the market may get to and either break to continue upwards or resist and come back down. So sometimes we want to set what's called a pending order. And in this scenario, I'm showing us a pending order sell limit. We want to set a sell limit at a price where if the market, in this case, upwards to, only if it does, do we want to sell. So sometimes we're able to say, hey, I'm not going to sell right now. I'm going to wait. Why don't I want to sell? Why don't I want to be selling at this point? Maybe because I know it's not yet the ceiling, so it could still go up. So I only want to wait for it to first get to the ceiling, knowing that it will either come down or break and keep going up. And I'll be able to identify it. I'll be able to see it, right? So I want to set a sell limit at this price and a stop loss above and a take profits below, right? And a take profit below. Once I'm able to do this, only when the price eventually gets here do I start selling or do I place a sell order. So notice this will happen automatically. The price keeps going up, my stop loss will be triggered and I will lose, let's say, $10. Or like in this scenario, price got there, I sold, price moved down instead to my take profit. If this is 100, I believe we can say this is, if that's 10, I believe we can say this can be 100. So this is how we trade. Sometimes our ceiling gets broken. Sometimes our floor, we realize we're on a first floor and the floor is not strong enough, so it breaks and we're able to go into a lower floor. So it's because sometimes, even though we can correctly identify the floor and the ceiling, we're not the builder, so we're not able to guarantee. However, we can observe and we can know when the floor or the ceiling is broken and we can react to it. Right? So I'll keep the scenario simple and stop here and switch back to reading a price chart. Again, this is going to be in the this is going to be put in the Telegram, so you're going to have access to it and you're going to be able to read through word for word. I'm not going to read through word for word. But just to run through. Support, resistance acting as support makes a case for the upward movement. Why is structure important? Why is it important for us to be able to identify the floor? Why is it important for us to be able to say we're in a house? That's the floor and that's the ceiling. And at some point when we break through the ceiling and we realize, hey, there's another floor up there, or we're able to realize that and say, we're now in another floor. What it means is there's room to go down, there's room to go up. If the floor is not strong enough, we could break and go down. The floor is strong enough, well, we could go all the way up to the ceiling. And if the ceiling is strong enough and acts as resistance, then we can come all the way back down, right? It's important because the only way you make money is what the market does after you've placed an order afterwards. And for it to be happening afterwards means we need to be able to anticipate, predict rightly, and make money as the move happens afterwards. Okay, so it's important that we're able to understand this simple structure. This simple structure would help you also figure or observe and know when to get out of a trade minimal loss. This simple structure is also going to help you know when to get out of a trade with maximum profits. So why were we able to get out of here before the market came all the way back? So if we were making money all the way down, it would have been painful if we did not take profits. Why were we able to take profits? Because we could identify that this place was acting as resistance. We were able to get out of that trade. So trading is you buying and selling, taking profits maximally, cutting losses minimally. That balance is how you consistently make money. You lose some, just like you make more frequently and more in size. Now, how are you able to maximize your profits? By being able to identify where the resistance point is. How are you able to get out of losing trades? By being able to identify where resistance has been broken and is now acting as support. Okay, so that's trading and understanding the charts and the movements. So sometimes you're buying the continuation or you're selling the continuation of the trend. In this scenario, sometimes this is you selling a reversal. Sometimes you're happy when it breaks and acts as support. So this is where you're actually buying the continuation. So sometimes you're a trend trader. You're going in continuation of the trend. Sometimes you're a counter trend trader. Now you can either be or you could be both depending on the scenario. So can you see where someone may have sold and takes a small loss because the market kept going up and someone bought instead and is making money? It's just our ability to be able to identify when the market is not going in our anticipated direction and getting out of a trade short, or being able to cut out of that trade early enough, small loss, or being able to stay in the trade in profit long enough, or being able to get out when you observe there's a resistance, so you're able to make some money as well. Right? So simple lines, simple structure. Then you go on to placing trades. So we're running out of time, but I'm going to switch in and I'm actually going to just do a quick run through on placing trades. Okay, it's going to be quick, it's going to be fast, but then as I do, this is also the time for questions. Questions based on what I'm showing, questions also based on your journey so far. So while I'm switching screens, feel free to keep your questions coming. Okay, so you're all unmuted. If you have questions, this is where you shoot them. While I switch to my screen and just go over some basic stuff, we'll continue with the MetaTrader for tomorrow. Let's see. Okay, any questions? Any questions? Any questions? Okay, let me join and switch to my phone. Okay, this is your cue to ask me questions, if any. Okay, let me throw this on out there. Here's a question. Presley and TT Balu. Presley and TT, I'll throw this one at both of you. Think about it and give me your response independently. Okay, well, one person will hear the other first, but I'll just throw it at both of you. Assuming we're in a two-story building and we are on the ground floor, if an object is able to break above the ceiling of the ground floor, what floor is this object going to be on? First person to answer, TT and Presley. Feedback. Okay.
Can I?
Yeah, shoot.
If it breaks it's going to stay up for a while, then bounce. It's going to stay up, bounce, and depending on the bounce, you either remain in that floor or come back.
Okay. Does anybody agree or understand or does not understand what he said?
Yeah.
Okay. So he says, if we break to the upside, then we're in a new floor. What that means is maybe we were just in an elevator and we've actually gotten to the first floor. And so if we step out of the elevator, the floor is actually going to be able to support us to remain on this new floor, right? But if we step out of the elevator and we go crashing down and the floor was not able to act as support, and we fall back down to the next floor. If you fell from the first floor, where are you likely to go to? You're going to go to the floor of the ground floor, gravity. Okay? So here's our app. Here's our trading app. Let me quickly see. Alan, are you on here? I'm going to unmute you. Confirm that you're on and you can hear, because I think we have a good scenario we can also use. Alan, can you hear me? Okay.
Yeah.
So Alan, do you remember sometime in the week you had a Euro GBP and I gave you some trades And at some point I told you set sell limits. At some point I told you instantly buy and take profit at a particular point. Do you recall that?
Yeah, I do.
Okay. So this is all that was playing out. I won't dive into our chat. If not, I could and show that. So this is all that was playing out. I had
Okay.
this marked up, and on the day where I sent you that, I think we were somewhere in between here. And so I figured, look, there's an obvious flaw. There's a high chance we're going to get all the way to the ceiling. So I made you set a sell limit. So when we eventually get to that ceiling, then that's where you should sell.
So,
At the same time, I told you instantly buy because I think we're going all the way to a ceiling. And so I made you set take profits, right?
oh, yeah.
Okay, and when I said sell, I also made you set a stop loss because I said, look, if we go and we keep going at some point, we will be able to identify that that ceiling was broken and is now a flaw. So we should also get out of it. But then because we also knew where the flaws were, we were also able to set some take profit targets. So I would ask you to go to your MetaTrader 4. You probably want to do what I'm doing on my screen. Click here and go to history.
Okay.
You want to click on history and you want to view the last week or the last month. Just be able to pull up some content, right? Just be able to pull up some content. Okay, and you see all of that probably very likely should have played out. So you go on to share that in the Telegram group. Okay, but when we place a trade, so I'm just going to randomly do some. So this is where the market currently is. Let's see.
Okay, well, it's showing me history, MT
Don't worry.
history.
Don't worry. So click on the icon I showed you. You want to click there.
I can't find the icon. Hold on, please.
Okay, so work that out in the background. We'll work on that as well later. Okay, so over here, if you were to just look at this, we can take a good guess. We can take a good guess that, hey, we seem to be at a floor or ceiling. So depending on what the market does, it will either come down or it'll go above and do this and keep going up.
Yeah.
So I may say, based on this, I want to instantly sell. Simply go over there, click on that, and I can instantly sell. So I just sold. I could also say, hey, based on this, now I have sold. At what point would I realize that this is not going down? Me selling for me to make money has to go down. This keeps going up, I'm going to start losing money. So at what point do I call it quits on this trade? Well, I may say, hey, this might be my ceiling, but I also see what could be another sensitive level. So what if it only just goes up here and then this acts as the ceiling and it comes back down? Or what if it does this? What if it goes above, comes back here and goes up? At some sign I see in this region, I should be able to tell whether the market is going to go up or whether it's going to go down as I have anticipated. And I should be able to, based on that, either stay in the trade to collect the profits or get out of the trade, cutting a small loss, right? So what that means is I want to set some target points. So I want to say, hey, the market keeps going up, stop my loss at a particular price. The market keeps going down when it gets to where I perceive to be the floor. Take some profit for me automatically. So I simply need to put in the price. I simply need to put in the price points. That's all the magic there is to this. That's all the magic there is to this. So I'll go back to the charts and let's see how this marks up. So here's my trade. I'll zoom out a bit so you can actually see it. This is my trade. I've sold here, sell. And I've said, stop my loss here. If it keeps going up, get me out of the trade there. If we go down, well, I perceive that there could be resistance here. Why? Because previously this level has been sensitive. Previously, that level has been sensitive. So if we keep falling down from here, I expect some sort of resistance around here. So take profit for me. That's just what I did. Stop loss, take profit, entry price. Now I may say, hey, I don't want to sell instantly. So let's say the market was still here and I said, no, this is the ceiling. So I want to wait for the market to come all the way up first. What I would be doing instead of an instant execution, what I can go on to do is click on there and actually set a sell limit instead. So if I do that, I will now need to specify at what price above. So at what price do I actually want to sell, since I don't want to sell at this current price. I don't sell at the current price. So I may say, hey, what in a sell when the market goes to 8940. If the market keeps going up all the way to 8960, get me out of the trade. But if we go all the way to 8940, then I anticipate that the market will come crashing down to 8860 instead. And then I place a trade. So take note, this is what happens. This trade has been placed, but it is not yet active because it was a sell limit. A sell limit at this price. This is the current market price. But I want to only sell when the market goes here. So that's why it's not yet active. That's my stop loss, that's my take profit. Okay? However, this other trade is active. So see what I get. It says I am in a sell. I sold at this price and the market has moved to this price. But take note, because the market has moved from 144 to 169, it means the market has moved up. So I am in a loss instead of profits. I'm in a loss because the market moved up and I sold. I would have been in profits if the market moved up, but then I bought. Right? Do we get this? Okay, do we get this scenario? I'll keep it simple and I'll stop at sales. But if you flip everything I've just shown you upside down, that's your scenario for the buy. Okay?
Market comes down and you bought, you lose.
Yes.
Okay.
Okay? So for clarity, here's my sell limit. I've set a sell limit here. I've said when the market goes up here, then sell. If it comes down here, I make money. If it keeps going up, get me out of the trade. So this is my risk. That's my risk. Meaning if it keeps going up and I lose money, that's what I lose. The market instead comes down. This is my target. So this is what I make.
Okay.
So if the market was here in between, why didn't I want to sell at the current price? Well, because I know where the ceiling is and I need to wait to first allow the market get to the potential resistance point. So that's why sometimes I don't want to instantly buy or sell. Sometimes I want to instantly buy and sell because, hey, I'm at the ceiling right now. So I want to sell or buy right now. See this playing out? Floor acted as resistance, broken, going back to test as support, potentially. So if this acts as support, then expect this to happen. Just like the textbook, and I'm willing to put my money on the line. That's what trading, this is all there is to trading. This is all there is to trading. See the other scenario. Floor and ceiling. Market got to the ceiling, couldn't go above it. So I said, hey, this place is acting as resistance. So I'll sell. How do I know if I'm wrong? If he does this and this, then I get out of the trade. So that's my risk. Where's my potential target for profits? Well, floor. Floor. If this is the floor, can we see that floor was broken and tested? Can we see this textbook stuff playing out? So what started as the PDF and me simply giving you this analogy, that's all there is to trading. This is all there can be to trading. Placing the trades based on the information. Placing the trades based on what you perceive would happen next, or based on where you think the market is going to and how it may react when it gets there. Can we see this? Broke, retest, came down, retesting, potentially come back down. So this is all there is, this is all there can be to trading. Textbook stuff. Resisted, broke this level, came back to test, resisted, so we bought. Where's our target? Ceiling. We bought. Where's our target? Ceiling. That's all there is. This is all there can be to trading. And we don't have control over it. So we just get in based on our analysis and let the market move. Right? And we let the market move. Okay? So you learn this interpretation using something like swipe trades or going on the live sessions and IML peak talk and all of that. AUD, adjust TP, NZD CAD. What this just means is at some point there was the analysis. Hey, buy or sell this, right? There it was. Sell by market. It means at the current price, just sell this thing right away. That was what this guy told us. Why? Because he observed and was able to see that there's resistance. And he has other levels where potentially this market is going to get all the way to. So he's simply done the observing for you. and has been able to identify the zone. And I said, hey, market is here now, but this space is likely going to act as a ceiling. So let's sell, put our stop loss above, and take profits here or here based on the analysis. And all you're simply to do is go on, sell at this price, stop loss where you've been told, take profits where you've been told, and that's just it, pretty much. Okay, so this is how simple and straightforward trading can be, and that's why I'm here showing you, because you have a very solid chance at being able to learn it, because it's as simple as identifying flaws and ceilings. You also have a very good chance at making money because you can tag along people who have been identifying flaws and ceilings for a longer time, right? There's no magic to this thing, and that's just how we make money. Okay, so Alan, remember to go on, find the chats, throw those things in the group. Any questions? The lines are open. We'll call this off at this point. Any questions from anybody? Any questions from anybody? Okay, let me just quickly look into the chats. Make this video available, will be available. We'll continue tomorrow, and we're going to have these sessions every week. So this is why you could go grab your friends and drag them to come on and see what we do, see how simple trading can be. Also realizing that IML, remember, that's where you get your full course. That's where you get your full course, and so you're able to go on and actually learn all of this in detail. You're able, while you're learning, to maybe use swipe trades and use yada yada, all the rest, and actually just go on and make yourself some money, right? So we're able to do all that. Okay, we're able to go on and do all of that. Okay, so you learn and you're able to predict. Risk some money, make way more, because you're able to interpret what's really going on. No guesswork. So this debunks the notion that Forex trading is gambling. It's not. You making informed, smart decisions and making some serious cool money along the way. Okay, so I'm prepared to shut this down. Any more questions? We've had a fantastic long session. I'll probably have 2 or 3 recordings coming off of this, so I'll probably allow stitch them together and make it available at some point. Okay, any questions before I take off? Are we good? Okay, thanks for coming on board.